at the end of the day, the big idea is half the money in the world is just long-term capital. People just want to preserve their wealth. I mean, it's the greatest use case in the world is just wealth preservation. I just want to take my money and I want to put it in a savings account in cyberspace. I want a bank in cyberspace that won't rip me off. And I want to buy an asset that no entrepreneur can make more of, no AI can make more of, no politician can make more of. I want to know I'm buying 1/21 millionth of all of the money in the bank for the next 1,000 years. And I don't want a management that can kind of freeze my assets, steal my money, debase the currency. And so Bitcoin is that very simple idea. And that I think is my elaborate explanation for why I think it's going to 13 million a coin. Bitcoin is the world's first perfect monetary asset. And by perfect, I mean hard capped at some fixed amount. Every other monetary asset you could use as a long-term store of value has some leakage or inflation in it, whether it's gold or silver or real estate or art or whatever it is. There's entropy, there's degradation. And so the ideal perfect monetary asset would be some fixed amount of something for the next 1,000 years or 10,000 years. And so Bitcoin's the first thing like that. Even things we think that are scarce, like real estate, we can make more real estate. We make more waterfront property even. Half of Boston and half of Miami Beach is man-made waterfront property. So you start with that idea of scarcity. So why does it go up in value? It goes up because the supply of dollars is increasing 7% a year for the past 100 years. And the supply of weak currencies is more like 14% a year. And that means the dollar loses 99.9% of its value over 100 years. A weak currency would lose, 99.9% of its value sometimes over 20 years. So the reason that the value of scarce, desirable stuff goes up is because it's difficult to manufacture with a factory. You ever go to Hershey's, Pennsylvania, you see a factory and they spit out candy bars, and they spit out candy bars at 50,000 an hour in a box, and you can't create 50,000 candy bars, but they did it very well. That's why they created a company. So if a factory can make it, the price is going down. If a politician can print it or declare it, the price is going down. If technology or if a robot can create it, if a technologist can make it cheaper, if it's subject to Moore's law, if the AI can spit it out, you don't want to store your monetary wealth in anything that human ingenuity or politics creates more of. So that just leaves you with things like Da Vinci paintings. You like scarce art of dead people. You'd prefer beachfront property in Palm Beach over waterfront. It's harder to create beach than it is to create waterfront. And when you look at those things, an acre of land in Miami Beach has gone up a factor of 1,000 in 100 years. Beachfront property in Palm Beach might have gone up 2,000. I mean, these things went from $10,000 an acre to 20 or 30 or 40 million an acre. So the general idea is the currency supply is increasing. There are certain scarce, desirable assets that are not increasing very fast. Bitcoin is hard capped. It's not increasing at all. So why is it going up to 13 million a coin? Well, for the last 10 years, it's been appreciating 60% a year on average. For the past 4 years, 60% a year. Okay, the S&P index is increasing about 15% a year for the past 4 years. The money supply, the dollar, is increasing somewhere between 7 and 10% a year, maybe 10% a year for the past 4 years. So once you understand that, Bitcoin is simpler, more thermodynamically sound than an equity portfolio, right? The thing that's going up a bit faster than the inflation rate is a diversified portfolio of high quality companies like Tesla and Apple and Google and the like. They can maybe outperform a couple of percent due to human ingenuity and robots and AI and Moore's law technology. But companies have attack surfaces. So companies have counterparty risk. The risk factors of companies are they might get sued for antitrust. You know, China doesn't like Nvidia. Europe might tax Apple. A union might unionize Amazon. The US government might sue Microsoft, right? If it's a really good company, it's going to get a regulatory onslaught. And if it's a bad company, it's going to get crushed by a bigger company. And then maybe it just gets unlucky because of a war or famine or a hurricane or bad weather. Or maybe you're located in a city and the tax rate triples. And so there's a parade of horribles that cause you to lose money on a corporate investment or a financial investment. Or maybe you have the best company in the world and it happens to be in Venezuela and the government changes. Or, you know, the people used to have really good companies in Cuba and then Castro took over. And then all of a sudden it becomes illegal or the currency collapses or they expropriate your property. You have the best oil company in Venezuela and then the government takes it. Okay. Or maybe you have a great company in Russia and the currency collapses like it did in 98. Or maybe you have a great company in Brazil and the currency collapses like it did about 30 years ago. And so things that are in the real world, things that are subject to political fate or weather or war or famine or competition, or maybe you have the world's greatest photo company like Kodak, oops, or Xerox, right? The world's full of examples of really great companies and maybe really great product. Maybe you have great land, maybe you own buildings, but the buildings were in Egypt and there's a coup. Or maybe the buildings were in downtown Afghanistan, you know, in Kabul. Oops. Okay, so what is Bitcoin? Well, it's not in the real world. It's not a company. There's no counterparty risk to a company, no counterparty risk to a culture, no counterparty risk to a currency, no counterparty risk to a creditor, right? You're stripping away counterparty risks. And so when you strip away all the risk, you get pure digital property. Why is it going to go up? It's going to go up because capital is flowing from the more entropic state, from the state of anxiety and risk and confusion toward the more ordered state, a less risky state. Why is money flowing into Bitcoin? Well, I'm going to take all your money, put it in random countries and random banks in Africa. Maybe I spirit it with a magic spell. And then I say, okay, it's Monday morning. Your money's in random banks and random countries in Africa. Would you like to bring it back to the US or would you like to leave it there? Right? Accidental? No. You're going to bring it back to a place you feel comfortable. Capital flows to security. It flows to where it's treated the best. It's flowing into Bitcoin because it's running away from Russia and it's running away from China and it's running away from Africa and it's running away from Venezuela and Cuba and it's running away from South America. It's even running away from Europe. If you ask the Europeans, the very simple test, do you prefer the digital dollar or the digital euro? 99-1, they prefer the dollar to the euro. In their own country, they don't want the euro. Everybody wants the dollar. Everybody wants to live in the US. Everybody wants their property in the safe apex network of the world. So capital is flowing into Bitcoin at 60%. The traditional method of storing your long-term capital is the S&P index is 15%. What's going to happen is that more and more capital is going to flow from the 15% to the 60%. More capital is going to flow from the 20th century to the 21st century. You got $1 billion of warehouses built in 1980. They're rusting, right? They're falling apart. You're going to have to rebuild them. You want to rebuild them for another 40-year run, or you want to put it into Bitcoin, right? So money flows from the past to the future. Money flows from physical to digital. Money flows from high risk to low risk. Money flows from insecure to secure. Money flows from the east to the west. Bitcoin simply represents the highest form, the least disorderly, least risky form of property rights. The 60% will track toward the 15. So over time, the S&P index and Bitcoin will head toward each other. So what do I expect? I think Bitcoin, as it gets bigger, it goes from 60% growth rate to 58 to 55 to 52 to 50 to 48 to 38 to 35 to 33, and the traditional world, the 500, the $150 trillion of traditional equities, that's basically a 15 percenter or 12 to 15 percenter. They'll start to incorporate Bitcoin. Maybe they'll start to creep up toward Bitcoin, but they'll also struggle with all the entropic risk and competition and weather and war and famine. So they're always going to struggle. Bitcoin's going to become half the size of equity. It'll start to head up toward the size of equity. And then there's $300 trillion of fixed income, bonds, preferred stocks, all sorts of ETFs that hold fixed income instruments, currency equivalent, sovereign debt. That yields about 5% right now. So 5% before tax, maybe 3 or 4% after tax. So as people get more comfortable with Bitcoin, they're going to move money toward Bitcoin. And then companies like MicroStrategy, well, we're going to create an equity that pulls capital from the equity capital markets, from the Magnificent Seven, from the S&P. It'll flow into MicroStrategy stock. And then we will create bonds, and the bonds will pay you twice as much or 3 times as much as the bonds in the traditional capital market. So as we issue those bonds, the capital that's in fixed income will jump onto a Bitcoin-backed bond, and the equity will jump onto a Bitcoin-backed equity. And over time, you've got $500 trillion of this traditional capital. Think of it as sitting up on that mountaintop, and it wants to go to ground. It wants to go to a simpler, more elegant, less risky, less disordered state, a lower energy state. But, at the end of the day, the big idea is half the money in the world is just long-term capital. People just want to preserve their wealth. I mean, it's the greatest use case in the world is just wealth preservation. I just want to take my money and I want to put it in a savings account in cyberspace. I want a bank in cyberspace that won't rip me off. And I want to buy an asset that no entrepreneur can make more of, no AI can make more of, no politician can make more of. I want to know I'm buying 1/21 millionth of all of the money in the bank for the next 1,000 years. And I don't want a management that can kind of freeze my assets, steal my money, debase the currency. And so Bitcoin is that very simple idea. And that, I think, is my elaborate explanation for why I think it's going to 13 million a coin.
Today you can get 0.01 Bitcoin for $1,000. It used to be cheaper. How important is it for somebody to get off zero and accumulate that first 0.01?
You want to figure out, what do you want to give to your grandkids? What do you want to retire on? Something scarce, desirable that you want to hold, that you think that someone wealthier than you, more sophisticated than you might want to buy from you 10, 20, 30, 40 years from now. If you think about it like that, then I think Bitcoin definitely ought to be part of that portfolio. I mean, everybody's got to decide what percentage of their portfolio. But at this point, we've moved past the point where you would be thinking that the government's going to ban it or take away from you. You're just buying digital property